Hey, how's it going, everyone? Welcome to this week's edition of Sales Boomerang University. This is our monthly market meeting, our monthly strategic meeting. We had to slide things around a little bit. Typically, we have these on the final Tuesday of the month, but we got the holidays coming up, so I wanted to get to you guys early. And we're talking about, hey, how do we set ourselves up for success? How do we close out the year strong and get prepared for 2023, whether you're in retail, whether you're a TPO, whether you're a consumer direct? How do we start to set goals and identify where we're going to be and get some traction ahead of 2023? My name again is Spencer Schultz, coming to you live from Baltimore, Maryland, where Sales Boomerang is based out of. Please let me know in the chat where you're tuning in from. And let me know what your role is. Are you an LO? Are you in marketing? Are you a branch manager? Give me a little context here. Please feel free to use the Q&A portion. We got an LO from Colorado. Hey, how's it going, Chad? Let me know any questions you have. Feel free to use the Q&A at any point in time. I'm going to jump around a little bit. Today's a little bit of a Mod Podge, a paper mache, trying to throw a couple different ideas at you and really talking philosophically today and strategically. We got a training specialist, Lisa from Columbus. We got Renee in New Hampshire. Love it. Awesome. We have Nicole, our SBMC virtual events manager here. She's tuning in from Michigan here. So super excited to have everyone today and to get on into it. And it looks like we got quite a few people trickling in. I did want to share a couple quick resources that I will be referring throughout this. I'm going to share our product guide here in the chat that I want everyone to have access to. This is located within our resource hub. Anyone, even if you are not a Sales Boomerang user, can utilize our resource hub. There is our product guide. This is going to have in-depth detail on each individual insight, whether it's cash out, mortgage inquiry, listing, equity, and give you further context. Again, anyone can sign up. You just simply enter your email, create a password. You do not even need to be an active Sales Boomerang user. So I wanted to share that really quickly before we dive on in, my friends. And again, wanted to have the message of how do we succeed? How do we set ourselves up for success? And this kind of dawned on me, and it's a little funny. I'm going to get to my old PowerPoint here. We used this graphic last SBU. Don't come for me, but I was ready to start crafting my new one in this essence. And something I've really been thinking about lately is, hey, whether you're retail, whether you're TPO, whether you're consumer direct, whether you're a credit union, a depository type institution, being first is so imperative for us, right? And wanted to go through here. I should have done this poll first, but hey, being first is so important. What are the other factors? Please let me know in the chat. Providing education and support, offering, of course, competitive rates and competition. But being first to me, I skipped around here, like I said, but these are kind of the major factors. Let me know anything else that we see in the chat here, ultimately, guys. Being first, Lisa says, yep, yeah, I kind of gave you the answer before I did the question. So that's my bad. But wanted to talk about it again, jumping back. How do we find opportunities to be first? What does that look like? And hey, how are we going to take advantage of kind of this end of the year downtime? We've got some loans in processing. We're trying to slide along here, clear our queue out, get ready. And hey, how do we use that downtime to own our agent's paycheck? How do we enhance those referral partner relationships and use some SBMC strategies, guys? Again, my name is Spencer Schultz, training and adoption strategist with Sales Boomerang. Was an LO for a few years, had a team under me, got into the data and analytics side of things, and hey, ended up at Sales Boomerang, able to work with a ton of awesome lenders and LOs like I've got in this group today. So again here, guys, the most important thing to me, well, all of these are important. Hey, sometimes we can't really control the rates that we offer. Sometimes, you know, the Rocket Mortgages of the world might have a better product for a given borrower. While that is important, and providing that support and education is imperative. But guys, according to the CFPB, the authority on this, almost four out of every 5 borrowers move forward with the first lender they speak to. So if you're a quarterback, you're completing 4 out of 5 passes. If you're hitting a baseball, you're going straight to the Hall of Fame. You're doubling, you know, Ted Williams and Mickey Mantle's numbers easily. Then the other important aspect there, guys, if you're not 4 out of 5 there being first, you have to be second. Being second is so imperative. This is my cheesy line, but I say Ricky Bobby wouldn't like it very much, guys. But almost, let's say 99% of that remaining 1 out of 5 almost is going with the second touch. So if you can't be first, you better darn be second. And really, guys, there's 2 ways to be first. There's having really strong relationships with our referral partners that are bringing us that inbound business, or we have to be proactive. And we want to get that 18% there, that jump from 77 to 95. We want to be second every time. I want the at-bats every time I can get them. But if we're not proactively trying to forecast and proactively trying to search for the next deal for our borrowers and setting that expectation early in that relationship, we're going to end up fighting for that 1 out of 5. And maybe we'll get 1 out of 20. We'll be that remainder, that 5% that's third or fourth and able to execute that transaction for a borrower, guys. So with that being said, we have to have the big picture in mind. This is according to Black Knight, one of the top AVMs in the country. 4 out of 5 are leaving us every year. 4 out of our 5 previous borrowers are going somewhere else with their next transaction. So we need to be first in that conversation. Again, that is what is missing. We're being reactive as opposed to being proactive. Now with this downtime, again, we want to do 2 things. We want to use this downtime to solidify strategies and solidify conversations, partnerships with our referral partners, and have that conversation. We're going to get into that. We have tons of YouTube content on this, guys. Like I said, I'm a former LO. I haven't been closing loans in a few years. With that being said, we have hundreds and hundreds and hundreds of hours, my friends, on real LOs at Cross Country, at Neo, at PRMG, at all these huge, huge, huge operations that are doing 100 million plus, 250 million plus. And I want to share a couple of them with you here. We've got Jeremy Forcier of Cross Country Mortgage. I'm just going to share my screen, take you on into the Mortgage Coach YouTube, actually. Let's hop on in here. We've got Jeremy Forcier here. Hey, how do you be valuable to realtors? There we go. How do you be valuable to realtors when rates are at 7%? Right here. I'm going to drop that link. And hey, you know, we're in the 6s now. Rates are starting to come down, but the message still rings true. And here is another one I wanted to share. How Dan Keller, who's doing over 100 million in loan volume, is getting more realtor meetings than ever, guys. It can be simple things. Sean Herrero, also of Cross Country, he shares a strategy that he reaches out basically with a QR code that he asks, has a Mortgage Coach TCA well prepared for, and says, hey, can you put these flyers out that have a QR code for everyone who walks in that open house to go take a look at and look at different options, FHA, conventional, for that property that they're viewing. They can scan a QR code when they walk in the door as a potential borrower, and boom, pops up a digital presentation. There's simple steps like that that are tangible, as well as more big picture conversations. Hey, when I send out a video to request a meeting with realtors, how about I don't try to be as buttoned up as humanly possible and the generic, hello, this is Spencer with SBMC Lender, and I've done X amount of loan volume this year. I have a 4.7 rating online. I have a 4.7 out of 5 stars, and I would really love to show you how I would be able to use our great products at SBMC to help you. Make it a little more genuine. If you're someone who likes to rock climb, if you're someone who likes to ski, incorporate that a little bit. Dress in your kind of, look nice, but dress in your normal outfit. Be genuine, be authentic. Most importantly, we don't want to be interesting. We want to be interested. We want to put ourselves in the referral partner's shoes. How am I going to provide you value? That is what they want to hear. We don't want to be interesting. We want to be able to have that consultative sales approach of, hey, here is the issue. Here is the problem in the market. Here's how I can add dollars and cents for you, and those kinds of messages. So again, guys, hundreds and hundreds of hours on Mortgage Coach YouTube, top producers, how they're winning with realtors, how they're getting creative with, certain arms, buy down strategies like that, everything you can think of. I like to listen to a couple podcasts while I'm working. If I'm doing, a little bit of logistical work, I'll put on Pardon My Take, a podcast to listen to about sports. I'll put on Small Town Murder, of comedy podcasts I listen to. Then I'm popping those on in the background as I'm working and trying to pull away one strategy that I can share with you guys from each LO or each manager or executive that's on those webinars ultimately. So please check those out. Hundreds and hundreds of hours, my friends. With that, we can get back on into it a little bit. So number one, like I said, the number one way that we're finding those proactive opportunities is by having those solid referral partner relationships, showing that we're a data-driven mortgage advisor that's going to be able to look for the long-term relationship. And I think setting expectations with borrowers is massive. We are setting expectations in the sense of retention, in the sense of, hey, what separates us from Rocket Mortgage. Let's say we've got a first-time home buyer. We're working our way through that transaction. We're getting to the closing there. They're super happy. They're about to be in their first home. Making sure that you let a borrower know, number one, you are a data-driven mortgage advisor. You are going to show them in the future, they should expect to hear from you when there's a change in the market or when there's a possibility from them. And you should try and predict that to the best of your ability. If someone's closing out an FHA today, they bought their first home and they're at, a 635, whatever it is today, that Optimal Blue shows us. Awesome. When are they going to be able to refinance into a lower? What do you project? Do we think that's going to be in October? Do we think that's going to be, 18 months from now? Setting that expectation. You're going to hear from me about this transaction that's upcoming. Next time I have relevant information from you, we have the best tech in the industry. You do, Sales Boomerang and Mortgage Coach. We have the best tech in the industry that's going to automatically notify me as soon as you have a possibility. Make sure to take down my phone number. We care about you becoming a homeowner, not a loan owner. We want to help you pay off this mortgage, establish wealth, put money away for retirement, have funds for Johnny and Janie for college, whatever it is. Ultimately, we're looking towards your long-term success with each transaction and trying to map that process out. So by setting that expectation organically as you're working through your pipeline is imperative. Winning with referral partners we talked about. Sorry, I said I was going to be a little hodgepodge. We jumped around a little bit, but the what's in it for you approach, providing options internally is another one. So when you're getting to that conversation with a borrower, you need to be examining multiple loan options as well. When you're going through the purchase, we need to be looking at FHA. We need to be looking at conventional. We need to be looking at putting a more significant down payment. Shop every product possible with that customer at that time, instead of allowing them to shop elsewhere. You want to shop with them internally as opposed to shopping you. So shop with them instead of them shopping you. We want to be doing these three key things, guys. This is the Mortgage Coach approach. The multiple loan options I just mentioned, we need to look at cost over the short and long term. How much interest is being paid? How much, PMI or MIP is being paid? What is the equity position that they're going to have at 36 months? According to the AM schedule, what is it going to look like? Then how long is that going to take for them to accomplish their goal? Are they considering retirement soon? Are they considering an investment property? Are they trying to move closer to their grandkids? What are their goals? How do we get there? What are the next 5 transactions for them? Considering the long-term strategy is really imperative for us, guys. When we're looking for these more proactive opportunities, Sales Boomerang has 2 major players that allow you to set that expectation up front. So if you're trying to get ahead of the next transaction, trying to get that 4 out of 5, you can do 2 things. You can use life event alerts, guys. These are going to utilize any public information, going through the courts, going through anything that is posted in public mortgage data, things of that nature, saying anything that increases the chances of a mortgage transaction or a significant financial transaction within 12 to 18 months, guys. It's going to be newly married. It's going to be birth. It's going to be high school, death, divorce. So there's the positives and the negatives. This sounds super Big Brothery because guess what it is? But there's also been a show called Big Brother for, 30 seasons, 40 seasons now. I think over half of my life at this point, honestly. So with that being said, set the expectation up front when you utilize something like life events. We're going to see, we care about you as a borrower for life. We want to be there when life happens. We actually scan our database because we've found that in a 12 to 18 month period, 27% of people have any of these instances happen of previously funded borrowers. So we want to be there within a year of life happening. So we're going to be there. Set the expectation. Then it's not creepy anymore. If someone's trusting you with a 30-year debt obligation, the largest debt obligation that they're ever going to make, one of their 2 or 3 biggest decisions they've ever made in their life pertaining to their home. If that's me, I want someone who cares about me when life happens. I want someone who cares about me when death happens in the household or divorce or birth or any of those things. So number 1, set that expectation. Number 2, you can provide this for your referral partners, guys. And referral realtors, they love to drip. They love to just drip, 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 drip. Go maximum push on the drip campaigns to their past closings. They want to make sure they're in constant touch. What would a referral partner say? What would that realtor say? Oh, a little birdie told me. They'll say, oh, I saw on Facebook. Oh, I saw on Instagram or LinkedIn that we've got another member of the family coming along. So you're able to provide this for your realtors, and guess what? You can take that same approach. Not everybody, not all LOs and in our industry, guys, we don't love to always be the one doing outreach. If we're a consumer direct, that's, if we're a forward salesman, it's a little different. But if we're someone that's typically relied on those referral partners to bring us business, maybe we're not as comfortable. But again, if you set that expectation up front, that borrower knows that you're going to be in contact with them. You can come to them directly and provide that next strategy. What is the next option? It's relevant information to what's happening within their home. So this is a 2-bird, 1-stone situation. You can enhance your relationship with your referral partners, or you can just simply see when the likelihood of a transaction is extremely elevated ultimately. The next one, guys, is our cash out alert. And you guys have heard me talk about this. I'm going to continue to, but we need to think and in the big picture of how we're going to succeed in 2023. What is the product? What is the loan type that is going to be successful in Q1, in Q2, in Q3, and Q4? We can find that within any parameter for the cash out insight, guys. If we're looking for credit repair, if we're looking for debt consolidation in Q1, we can take a FICO and say, okay, we care about 600 and above so that we can get that proactive conversation. 580 and above. We're looking for 580 to 640 for people that could improve their credit or do a debt consolidation to improve their credit. All right. Then we're looking for a significant debt signal here. Okay. Who has a 580 to 640 and has at least $10,000 in total revolving debt? Home value in this one, maybe that doesn't matter quite as much, but if you're looking for juicy opportunities, you can say, all right, what about 450K plus? And then what is the equity position? Do we want to see, 75% LTV? Do we want to see 65% LTV so that we've got some room to consider reinvestment strategies and things of that nature? So if that's your Q1 product, then, Q2, are you looking for the ability to do a, cash out refi? You're looking for the ability to consider investment property or move up, move down. We can change those parameters to that product ahead of Q2 and say, okay, let's look at 680 plus. Let's look at significant equity, 60% LTV or a higher equity position. Let's look at those with a little bit of debt. Let's show 5 to 10,000 still, as well as a substantial home value. And we've got Eric here. Where can we find more information on life events and non-credit alerts? Does this auto scan the database? Yes. So life events will be anyone in your database as long as we have name, their primary address, and of course, contact information so that you can get in touch with them. Anything we find will ding and trigger an alert in that instance. There's plenty of information. I shared the product guide for you in the resource hub. You can see that link. I will share that again here. And there's more information contained in there, guys. I just shared it again at the bottom. So you can log in through the resource hub. Just enter your email like so. I'll take you guys on in. Whoops. There we go. Exit out of that. All right. Let's go. Support.salesboomerang.com. This is what that looks like to do so. Okay. And we've got, you can hit new to Sales Boomerang sign up right here, guys, in the bottom left-hand corner there. When I click that link, I can just do Spencer@lender.com. You'll receive a quick email link to your inbox and you will be logged in. So we can see here as we get in, we've got loan officer resources. We've got you'll see branch managers and admins. This section's just for us. And you can type in, okay, Spencer was telling me about life events. You can find the full description. What are they? What events are covered? What do they track? What records go into them? Everything of the sort. Should be older than 6 months. Is there a queue available? Yes, you can create a queue for them so that you don't get a bunch of them at first. The watch runs bi-weekly and will trigger if the system has found something in the past 12 months plus. Can the client specify which life events? No. So all of those answers are for you right there. You can find related or recently viewed as well. So you can go say, okay, here's release notes for that. Awesome. Here's the release of life event alerts. And you can download a quick doc that'll show you everything in between. Back out on the front page, guys, you can see LO resources as well as branch admin. Let me have a Q&A here as well. And we have Christy. What's the main difference between HomeBot and Sales Boomerang? We go much further in depth than HomeBot does. Ultimately, we are not a consumer-facing product as well. So we're going to be combing your entire database and showing you any parameter that you're looking for. If you're, like I said, cash out, you can set parameters on every possible instance And we're going to be able to automatically run that with TransUnion, Equifax, Experian. We're going to be able to show you those proactive opportunities, those reactive opportunities as well. And we also directly integrate with MortgageCoach so that you're able to demonstrate an incredible digital video presentation as well through. And Christy, clients can't see or have access to this, correct? No, the resource hub is for clients. The resource hub is for you, the lender, not for borrowers. Sales Boomerang itself is never borrower facing. MortgageCoach is. So MortgageCoach, you're able to provide a digital video presentation and a total cost analysis. And let me pull up one of those for you guys and show you what that looks like right here. So with that, we can see an example. Here is a debt consolidation. It should be coming up in a second. It says my screen share is loading. There we go. So you'd be able to pull up this example here of a debt consolidation. On the left-hand side, you can see what the borrower's current mortgage product is, looking at, their current rate, 4.375 versus, and, hey, here's when you pay off your mortgage. Here's how much, there we go. Here's how much you would save. You can display different graphs and bars on the side and say, okay, very quickly, side by side, we're looking at a 30-year cash out at 3.25. What if we were to put an extra $500 a month towards your principal or principal reduction payment, as well as, hey, what about an investment strategy? You're able to highlight and show how much money does that save over short term, in other words, 5 years. Each of these options, any movement that this borrower makes in this instance is going to positively impact how much they're saving, as well as, hey, it looks like in terms of your net worth, how much equity you're establishing, how little interest you're paying, and all of those factors. Hey, it looks like this investment strategy here is going to put an extra $138,000 in your pocket. And you're able to custom design this considering debt, considering things of that nature, guys. So with that being said, that's the difference here. You're able to do a live digital presentation where you're able to show a client. So you're able to basically have Sales Boomerang. You could have it directly integrate into your CRM, directly integrate into where you're working. We work with over 25 CRMs currently. If they have an API, we work with them. So you're able to input your database, say, I want to see every example of this instance. We were talking about credit repair, for example. I want to see every instance where I could work on credit repair for someone in Q1. Those insights will come to you and you can have those automatically pushed into your CRM. So we can go from Encompass to Sales Boomerang to this alert in your CRM. Then you can set up automated campaigns or automated TCAs that go out. You can have defaults that'll automatically plug information in. Again, we integrate directly into MortgageCoach. And that borrower, by the time you first speak to them or they respond, could be viewing this presentation with you narrating a video in the bottom right-hand corner and walking them through a 2-minute overview based on their situation. So the first time that you actually pick up the phone to talk with them, when you have it set up that way, they could be credit qualified. They could be interested, they could have relevant information and already be considering 3 different loan options that you've gone over. By the time you actually pick up the phone and put in the work, you know they're credit qualified, you know all of every instance about their debt, about their current loan, about their interest payment. We also do something called loan data optimization, guys. Let's say that this borrower here, we worked together in 2018 with them and got them into a 4.75, and they actually refinanced at 2.875 in 2020, and we had no idea. We use CoreLogic and scan over 5,000 sources of public mortgage data, and we'll find that updated loan information to give you that much further relevance. So those are a few examples of how we can really set this up. I like to think of Sales Boomerang and MortgageCoach working like this. There's the old adage, you can teach a man to fish or hand a man a fish. With Sales Boomerang and MortgageCoach, if you put in a month of that elbow grease of getting the TCA set up, getting your watch settings, trying to fixate on, okay, we want to see instances of this kind of borrower, basically Google searching your database. By the time you have that all set up, it's like sitting back on the beach, drinking pina coladas while a huge automated net brings you credit qualified fish that are interested in going on your grill. My brain's a weird place, I know, but the goal here is less work, less noise, more muscle, less fat within our database. We want to make our database a living, breathing organism that finds relevant instances of possibility for a borrower and spits those videos, those digital presentations out without pressing a button even. You can just automatically trigger them through CRMs. And That's the goal here, guys. We're changing the industry in that sense. So the ultimate goal is that you don't need to be doing outreach. You don't need to be spending time worrying about trying to pull credit as soon as you're having a conversation with the borrower, because what does that do? When we know directly from TransUnion, Equifax, and Experian that they're credit qualified, it's going to put up their defenses. They're going to be like, whoa, whoa, whoa. If someone has to pull my credit, just my initial reaction, if someone's offering me something, oh, not so fast, my friend, easy, easy, easy. Even though I know that with a lender, we have up to 45 days after our first pull to have up to 8 different pulls for that mortgage transaction to make sure we're embracing the beauty of capitalism and ultimately, getting the best deal, pitting lenders against each other, all that good stuff. And I still, if you want to pull credit, I might get that fight or flight of whoa, whoa, whoa. So we don't need to jump the gun in that sense. We know they're credit qualified. So it's establishing trust in that sense. It's letting us know we're not wasting our time. It's refining our process. It's making us more efficient and relevant with borrowers and within our database. So I know I jumped around a little bit there, guys. But with that said, wanted to get back into it. So again, the life event alerts and cash out combined, anytime someone's had something happen in the household that could impact them, and anytime someone meets the criteria that you want to see. So to finish off 2022 strong, get ready for 2023, dial in. What does your lender, what does your branch, what do you want to see within Sales Boomerang in Q1 and Q2? And we should think about Q3 as well. And we can change that over time. And we receive new information. If, the Fed does something or there's some sort of implication that changes what we expected, we can always be amicable to that change and always adjust accordingly and be relevant in that sense. So the major things that Mortgage Coach allows you to do, guys, too, through Sales Boomerang, you can personally brand. We're examining those multiple loan options. You're able to be alerted when someone opens it. So if you see someone opens your presentation, you can automatically work that way. We've got these easy to digest graphs, guys. Gen Z and young millennials are becoming homeowners rapidly. They want a TikTok. They want an Instagram video. That's kind of what, as opposed to a fee worksheet or a long email or, some big pile of papers. They don't learn that way. Gen Z is not learning that way. They didn't grow up reading books. They grew up on laptops. They want a 60-second video with pretty colors and side-by-side options, giving them the most concise breakdown of the positives versus the negatives, pros and cons of each different type of loan transaction. We want to be looking, again, at that long-term strategy, setting the expectation with a borrower. Here's where you are today. Here's the next transaction. Here's your ultimate goal. Here's what we're going to do in 36 months or 5 years from now. Borrowers are doing 10 to 15 transactions throughout their lifetime. So we always need to be considering the sum of all debts and the sum of all transactions to accomplish those ultimate goals. And you can add those personalized videos. Guys, video content in any way, shape, or form, whether it's through text or whether it's through a TCA, it's an infinitely higher hit rate or response rate to these conversations. Like I said, if you've got a Gen Z kid by chance, if you call them, if you send them an email versus, a video or a text, they are going to respond so much more frequently. So making that switch there from kind of, of course we want to make the call because we can, of course we want to send the email because we can, and we do still see loans from it, but that personalized video is a different touch here, guys. We went over that debt consolidation, but again, within that, I'm able to highlight, hey, here's the cost of waiting. Here's where, let's say rates today hypothetically are 5.5% and they're going up. Here's how much that's going to cost you. Here's how much you save per month if you were to act now versus next month versus when it's 6.5%. So again, setting the expectation, you can really take all of the air out of the room with a borrower when you get to these instances. So we're able to fine tune our process through those watch settings. Here's what I want to see. When we get to that conversation, you can arrange a scenario of, hey, what is it going to look like if you wait? When you present this to someone that the rate's going to go up or that they're going to end up, it's going to impact their bottom line, there's nothing left to say. It takes really the air out of the room, air out of the conversation. If you wait until 3 months from now, 6 months from now, and rates jump up, you're going to be $300 in the hole per month. You're going to be, $3,500, almost $4,000 in the hole per month or per year if you wait. So the cost of waiting is imperative here, guys. Again, considering the sum of all debts, what are they paying on their credit cards? What are they paying on their student loans? What are they paying on their auto loans? If we consolidate that, even if rates are, 6% right now, a little over 6% right now, but your credit cards are in the 20s and your auto loans in the teens and your student loans are in the teens, we're still going to save you $400 a month considering that. And then guess what? We can refinance you into a lower rate down the road. So again, talking about the sum of all debts, the sum of all transactions, and how to get to that next transaction is going to help even more, helping them see the long-term solution. You can get this granular with it, guys. Here's your Nissan and here's your credit card. Here's your mortgage. Here's what it would look like with a debt consolidation. We're going to be paying those off. We're going to be reducing that, and it's going to be impacting your net worth. You're going to be paying less interest. You're going to be able to pay, $24,000 less in interest and more to yourself. It's always about the signal, the insight, and the strategy, guys, here. The signal, where do we look? We look in our database. We look at our past borrowers. We look at our referral partners' databases. We look at our leads, our prospects. We look at our portfolio. And then we get the insight. What can they do? Are they acting? Did they list their home for sale? Did they inquire? Did they have a credit pull by another lender about a mortgage? Or is there a relevant potential for them? Do they have an equity position? And we have a great strategy on how to use equity to diversify their portfolio. Consider investment property. Do a construction renovation loan to increase your equity through your equity. Is there a possibility? Then what is the strategy? What is the long-term strategy? What is the value add in each transaction, guys? That's how we create this living, breathing database, this living, breathing pipeline. So getting ahead of that now is imperative for next year. Because again, guys, I'm just going to come back here. This is the most powerful thing I want you guys to take away from today. You have to be first. You have to be proactive. You have to set proper expectations with borrowers in 2023. What is the market going to do in your lender's estimation or in your expertise? How does that fit that certain borrower's goals? And then how do we meet their long-term goals with it? You need to be presenting that strategy to borrowers early and often according to what transactions you think are going to be most efficient for you. So is it move up? Is it, buy down? Is it first purchase? Is it, that your referral partner is going to need you to, be available for this time period throughout the year in this sense, or whatever it is being reactive towards. So with that being said, guys, be first, be proactive, get ahead of 2023. And here for my more developing LOs, younger LOs, if you're a top producer, you might roll your eyes, but I guarantee these are 3 things that you do to add a couple applications, a couple closed loans per month. Guys, it is imperative that you follow up. If you don't act, you won't close the loan. And you'll be surprised. You might roll your eyes at that. Of course, it's obvious. But guys, I do these trainings specifically for individual lender partners of ours. Sometimes LOs will let these fall by the wayside. It's the holidays and, your pipeline was decent. It was a little better than you thought. Rates went down just a little bit and you're excited. And I don't really feel like following up on those equity alerts or on those cash out alerts. Why? What else are you in the industry for? We're here to make money and to help people. If you don't follow up, I've seen some LOs that have 500 alerts that they just haven't followed up on. They didn't get to it. Why? You won't close loans if you don't follow up. Number 2, guys, if you don't ask a borrower, you won't know, and they probably won't either. They don't have our expertise. They don't know the 5,000 acronyms that we had to memorize and different acts and different structures so that we could get our license. They didn't take that, 180 question, multiple hour exam. They don't know all the possibilities. So just because they haven't brought it up doesn't mean that they know. And if you don't ask if they've considered an investment strategy, an investment property, a move up, a buy down strategy, have they considered using their equity to create more equity? They won't know. And you won't know if that's something that helps them accomplish a goal. Again, be interested as opposed to interesting. Ask questions. That's what top producers are doing. The consultative sales approach here, guys, so that you can take detailed notes ultimately and get closure out of every alert. The closure is taking this digital, intangible alert or insight that we get and turning that into a real conversation, turning it into a real tangible loan or a next step. Greens, yellows, and reds, guys. I close it every time with this. We've got our greens. Okay. I've set up this credit repair instance of cash out. I have MortgageCoach set up so that it automatically kicked them a TCA. Borrower's interested, they respond to me, and we're moving forward. They are interested in consolidating debt. They're hurting right now. Fantastic. That's a green. Take the most detailed notes you can in your CRM or wherever you keep your notes. Create a reminder or a calendar invite for that borrower a week out of the conversation or the next conversation, or a day out or a month out. Maybe it's a little bit more of a slow play. Maybe it's a yellow, meaning, okay, we ended up talking about, all right, they've got an equity position. John and Jane Appleseed have a significant equity position and they're super busy. It's the holidays. Yeah. They've thought about it. They can't do anything right now. It's just too much, but they did really want to put a new deck on or finish their basement or refinish their basement ahead of next spring or summer. So you again, create those notes, create that expectation, set the reminder, get into your CRM, take detailed notes. What do you need to bring to the next conversation? When is a good time to send a reminder to them? When is a good time to have that meeting? What do you need to bring? Then you're prepared. Set that expectation with the borrower, prepare yourself. Then you got your reds. I used to be a junior LO, didn't have my license yet. I would get given a list of lending tree leads and I would look them up on Zillow or Redfin or Realtor. I would know the name. I would know the address. I would know the property value according to those websites, and I would call them up. And I would get given, pardon my French, but I would get given the middle finger through the phone 20 times a day, sometimes 50 times a day. That's all right. And it doesn't have to be that exact, but it could be they aren't interested. Now's not a good time. Something has changed. That's okay. Ask a couple questions, pull as much value as you can so that you know the next time that there's relevant information, the next time that you could bring value to that borrower. So get closure out of every single alert, guys. Follow this process with your referral partners too. If you don't go seek the relationship with the referral partner, if you don't ask them questions about their pain points so that you can later provide solutions, and if you don't take closure out of it, take the next step, then you're not going to end up being a top producer, plain and simple. You're not going to end up being someone who closes tons and tons and tons of volume and helps people when they're down. And guys, I want to talk about closing here as well. And we have a fantastic program coming up. I'm going to pull up really quickly. If you've heard of Mortgage Champions, if you've heard of Dale Vermillion, I want to bring this to you guys and to your attention. We have a super awesome program. If you're someone who is a executive, someone who is, a branch manager, whatever it is available to your team. This is also available on an individual level here, guys. We've got Meet the Market presented by Mortgage Champions to have proven strategies for more business in today's rate environment, low inventory, all of that good stuff. We're going to have Dale Vermillion, the best in the business. You know his name. We've got Alex Kuznichin. We've got Dave Savage, the founder of Sales Boomerang and the founder of Mortgage Coach, respectively. Guys, this is about how to close. This is a closer's course. This is something that we've been workshopping for quite some time. It's going to be 6 phases. What's the environment? What's the foundation? How do you get to the conversion from there? And how do you get to a deeper conversion when you might not have gotten all the way through? So it's going to be a multi-phase learning track that progressively works through the conversation, being the consultant, finding the solution to the pain point, maintaining those partnerships with your referral partners or relationships with your borrowers. Guys, it's going to be video-based. It's self-paced. There are 30 modules that come along with it. There is tons of time for Q&A, and it's all built in around professional video content that allows realistic, not in the land of fairy tales and gumdrops and rainbows, but in the land of how our top producers closing today. What are proven and effective strategies in the market? What are proven and effective strategies considering the resources that you have? Nicole just dropped in the chat, everyone. There's the Meet the Market course info and registration, which you can find. And there's a walkthrough taking place tomorrow on the 14th. And you can register right there by clicking that HubSpot link. It'll take you right to the registration so that you can learn more about it. We're going to make sure you retain that just through some basic modules here, guys, as well. They're going to make sure that they're concise to the point. It's not 50 questions for the sake of being 50 questions. It's going to be making sure to really stamp the dot on the exclamation point here. There's retail pricing for individuals, and then we have lender-based pricing. So if you want a full course for your entire sales team or for a specific branch, whatever it may be, there is better pricing, guys. You can use that QR code at any point. Nicole dropped the link in the chat again so you can find more information. Again, webinar tomorrow, 12/14, Dale Vermillion, one of the most storied and successful LOs to ever do it, guys. Proven and effective strategies, how to maintain those long-term relationships, how to streamline yourself and be the most efficient LO that you possibly can. So all of that taking place. Again, that course is self-paced. So if there's any questions on that, any more information, please do not hesitate to reach out to me, but a really powerful program to make sure that you're going to get started strong next year. And guys, we have Eric in the comments here. Great tool to update on rates before they go out looking at homes. Exactly, guys. That's getting creative, Eric. You can set rate parameters or instances ahead of that anticipated change. You know first. The borrower doesn't know until it actually happens. So you can bring that to them. Project. Talk about the next transaction. Be the first. 4 out of 5 loans are closed by the first. So be first with Sales Boomerang. Be first with Mortgage Coach. And you will add at least 1 to 2 applications per month, guys. At least 2 funded deals per month to your pipeline. So we do have Sales Boomerang University. I know today was a little bit more philosophical, a little more broad, but we do have Sales Boomerang University 101, 201, and 301 at the first, second, and third Tuesday of every single month. The Sales Boomerang 201, which is on our credit alerts like mortgage inquiry, EPO, as well as credit improvement, will be taking place in just a few minutes here, guys, or excuse me, at 3:30 Eastern Standard Time. So those are at 3:30 every single week. So I'm getting ready for that one. If there's not any more questions, guys, I'll give a couple more seconds here, but I really appreciate your time. Thank you so much. I hope everyone has a wonderful and safe time with their family through the holiday season. Go help some people, go close some loans. The 2 things we're here to do as LOs, guys. Have a great day and happy holidays.